Hello everyone, this is Popeye and today we are sailing together to the Old Wild West for the good, the bad and the ugly YouTube series. A video collection where I will evaluate some of the past trade that I took in the previous days in order to check the why, the what and the how behind this trade, in order to pick one good trade, one bad trade and one ugly trade. We will evaluate together this trade to see how I can improve on my trading journey, but also I will try to give you some tips in order to grow in your path to become a profitable trader. So stay with me here in the Wild West for the good, the bad and the ugly YouTube series. As always, big shout out to Bluefin for sponsoring my YouTube channel. Make sure to trade with me on Bluefin. You will find the referral link on the description below. And before moving to the good, the bad and the ugly, also make sure to subscribe to the YouTube channel, and at the end of the video, if you enjoyed, make sure to leave a comment and a like. But without further ado, let's go to see the good, the bad and the ugly. So as a good trade for this week, I picked the BTC long I took at the very beginning of last week, and this is a good trade mainly because I was monitoring some level, I was monitoring something to happen, the timeline was extremely bullish, I just respected my system and I went short, and the price started to move lower quite aggressively. So to look at the context, I share all these trades basically live on X, but somehow we had this range since November, tested many times the resistance level, again price start to approach that range high with something that I noted and I started to post also on the timeline, that was a very clear low time frame trend. The low time frame trend was very well represented by the 10-minute EMA and EMA 200, that is this one. So what was nice about this trend, that was very clean, as you can see, tested several times this trend and kept uptrending, beginning mainly from the beginning of 2026. You see this is 31st December, 1st of January. We started this push above, price followed this trend with this local bullish structure very clearly. Somehow market makers came back to their desk because this is the 6-7 of January, and there was a very peculiar, I would say, confluence that really attracted my attention, and I think was something that I also mentioned on last week market weather bulletin, and was the confluence of more or less this low time frame trend exactly with the range high that you saw before on the high time frame chart. So as I explained in the market weather bulletin, this could end up potentially as a deviation. So in this moment we were trading above, so it was a breakout, but if this price would start to deviate back inside, it would form, from a range perspective, a bearish deviation, so a potential short trigger. But the confluence here for me was kind of magical, something that sometimes the market offers. The confluence here was exactly with this low time frame trend. So by losing this trend exactly on this level, as it happened, more or less here where I opened my short in this area here, we also deviated back inside the range. So for me this was something that gave me a lot of confidence on this short. That was basically, we are deviating back in the range, we are losing this clear uptrend that we had since the beginning of the year, and I immediately opened the short without waiting further, exactly here when we lost the trend and we deviated back. As you can see, exactly that 10-minute trend was confluent here with this red line that is the range high. I kept my short as long as this low time frame trend, as you can see, was acting as a resistance. Then I took a lot of profit around this area when then the trend started to become choppy. So a very simple trade, let's say range high, low time frame trend, go short. Despite what everybody else was saying, despite all the indicators were pointing to other price, I kept this extremely simple and was effective. Now, as you can see, the price started to chop around this trend, so for me this trend is not relevant absolutely anymore. I open a long here based on other factor, but again I still running a little part of this position in case we drop further down. But to me this was a pretty good trade, and I was pretty proud for the execution, especially because the timeline was completely bullish exactly at this level when the price then started to drop, and it dropped almost $4,000 or $5,000. So the good trade for this week was this Bitcoin long. The bad trade, I picked a monad trade. So this is, let's say, a little bit a complex analysis because there is somehow 3 trades involved. The one that I picked as a bad trade is the long that I closed for a small loss, but I want to show you a little bit the context. So as you can see, I've mapped on Monad this big range, and my first level of interest that I started to post, I think, days before, not sure if I get it here, was actually this post I made. I say this looks a decent range, so I'm interested to long this level here, but potentially also to play a scalp short. So I played the scalp short in the moment we lost this local range. You can see here we lost it, so I opened the short, I took some profit. So my idea was to long as close as possible at range low of this big range, and price still didn't visit at that price, but the original plan, let's say, was to long this area and to short the move down. As you can see, is coming into effect. So we did break down here, we did have a bounce, and then price is really coming down. So first of all, bad management of the short, because I closed it at break even when I took some profit here for 0.30, 0.4 hour. Price bounced back, I closed the short at break even here, while you can see the short would be still alive and the price would be almost at take profit, final take profit of the short. That is the place where I'm looking for the long. The bad trade was actually the fact that I decided to switch long here, because we had somehow reclaim, as you can see, this range here. As you can see, this local range here, when I saw this range being reclaimed, I saw the market structure break, I say, okay, let me play this range, and I put this long trade that you can see here. Why I consider this as a bad trade? First, because I had a plan, and the plan was more focused on the real level, and you see the price is coming down here in the real level. Second, because this range was a bit weird, and I think I had a discussion about this with some of you on DM on X. And basically the point of the fact that this range was a bit weird was, let me show you with this example, the fact that price was somehow ranging here, ranging, we did get the deviation below here, we traded a little bit, we came back here with some sort of market structure break. So at this stage I wanted to go long, and usually in these settings one of the examples that I use is the Fibonacci 0.75. What was the problem, or demand? What was the problem? That we were already below range low. So from a range perspective, this would not be a valid deviation, because what you want to trade is something like this, the deviation, price come back, you long range low, and you look for a move up. As you can see here, the level, probably you cannot see because the chart is a bit messy, the level are confused, because the 0.75 is this line here, let me mark it, is below range low. So this is the 0.75, this line here more or less. So as you can see, the 0.75 demand or whatever are below range low. So luckily enough, when I see I was filled, but the price started to find acceptance below range low at this level, I closed it immediately somewhere more or less at 0.75. Luckily, because then it broke down. But I think this long, the problem and the reason why I put this trade on the bed, this long was not supposed to be taken. The short was supposed to be left running, and the real long, the good long, not sure how it will evolve, but it makes much more sense is this one, because we are at range low of this bigger range. Also, the mistake I did, the other mistake I did, is that I always repeat myself, do not do business or too much business at mid-range. Look where I took these two trades, so both the long and the short, I took them at mid-range. So a really choppy area, really a place where I should not be trading. So I'm a good preacher because I always say this about mid-range, but I'm also a sinner because I make this mess here on this level. The original planning was proving to be pretty perfect because I said the 7th of January seems very distributive locally, so could both play a scalp short and a swing long. Scalp short would have always been there, and the swing long potentially is going to be filled, and then we'll see what the price do. So the bad trade for this week is Monad. As an ugly trade, this week I'm sharing a trade that actually I didn't take, and was an XLP short that I actually was monitoring from the 6th of January. I posted several posts, share also in Telegram. This was mainly a funny one, but to say it looks ready for distribution to BART down because there is a range here and supply. Never executed this trade because I made a mistake, and the mistake I think is shared in this post here. You see, after this we have another impulse higher, and I'm writing still interesting on shorting this if it gives a bearish market structure break. That is something that I usually do. So my idea was to this is the bullish structure that XRP is running locally. And I said, okay, if it gives a bearish market structure break, I will short a retest. That is per se a good strategy, is not wrong 100% of the time. You see XLP is downtrending, XLP have many reasons for to be shorted because it's a clear downtrend, because supply, it likes to manipulate and go down. But the reason that I put this trade in the ugly is because I didn't traded this price action here. So the short that I had in mind was never filled because we did market structure break, we never retested, and price went down. But the problem is that I didn't adapt my bias, so I posted this here. But already here, I was supposed to take into consideration this deviation here. So there was already a distributive manipulation here, a bearish range deviation on the top of this range. You can see that price is trending, start to range. So I always preach, look how the range behaves. This range seems to be breaking out. We do have a deviation. So this was already a trigger for a short in my playbook. Probably even this one was not easy to enter, probably in lower time frame there is some structure here, but this was already for me a short trigger. When the price start to break down from this range, now you fully realize that there is an uptrend, there is a consolidation, first sign of a potential distribution here because this range is deviated on the top. Second sign that this is truly a distribution, this range is truly a distribution after the uptrend, because first sign here, second sign, this range is broken down, and then boom, you see a downtrend start and price go lower. So I put it in the ugly because I didn't adapt myself. I fixed myself on trading this on a certain way, but there was already the possibility to trade it up here because of this downtrend down below. So the ugly trade for this week is actually a trade that I didn't take, but consider that I missed on this trade something like 22% move down if I was able somehow to short range high here at the top. For the summary, as always, make sure to trade with me on Bluefin. You will find the referral link in the description below. Bluefin is a super cool exchange, non-KYC, so you just need an email address to join and trade with me. Using the referral link on the description below, you will enjoy a lifetime 20% discount on trading fees, and you will also be eligible to participate with all the cool campaign we run with the team that will give you a lot of benefit like trading bonus and other stuff to help you during your trading journey. Bluefin has a lot of liquidity, has a very cool interface, very similar to Bybit if you are familiar with it, and is absolutely a recommended exchange. So quickly, summary. For Bitcoin, the summary is simple. Keep it simple, monitor what is happening, and whenever you have confluence on low time frame trend along with macro area, like in the case of BTC range high, respect the level. So even though everything looks like it's gonna break parabolically, the timeline is speaking about 100k, 200k, price discovery, all-time high, cut the noise, don't give a fuck about anybody else, check the level. If it looks like a deviation, if it smells like a deviation, it's probably a deviation. And if there is, like in this case, a low time frame trend that helps you to take the trade and make the risk very small at 1% and whatever, go with it and trade it. So respect the level, respect the low time frame trend, and cut the noise you get from anywhere else. For Monad, a couple of takeaways. So the first one is respect your plan. As I told you, I had a plan, was a clear plan, and probably was the best plan. I messed it up making new plans along the way. The second takeaway is something that I always say, try to avoid as much as possible to do business at mid-range because it's a choppy area. So follow your plan, follow your idea, do not get too much confused on micromanaging, and avoid doing business at mid-range fair value because it's the most choppy area in a range. Try to do business where it really matters. For the XLP trade, my takeaways is adapt your bias. So I saw the potential for this trade, for this distribution back in the 6th of January. So when the price was somewhere here, I already felt this was gonna be distributing. I waited, I fixated my mind with a plan, but I was not able to adapt the bias when there was this clear sign of bearish deviation and the following distribution. So adapt your bias, adapt your plans when is needed. So you see, in Monad, I adapted my plans unsuccessfully because I messed up mid-range. In this case, XLP, I was supposed to adapt my bias and my plans because it was really at range high at a level where I was supposed to adapt myself. So as always, I hope you enjoyed the video. I hope you find it helpful. Remembering reviewing trade journaling is probably the most important task we can do in trading. So make sure you always review the trade. And I hope this video series, the good, the bad, and the ugly, is giving you incentive and a good example to do your own. As always, make sure to subscribe to the channel, leave a comment and a like, trade with me on Bluefin using the referral link down in the description below, and we will see in the next one. Stay safe.